Good afternoon, Roland. Pleasure to have you at GOLDINVEST. I think this is actually a premiere. We always tried to arrange for a call, and GOLDINVEST, as you are aware of, has been covering FYI since actually pretty much the inception. So I'm even more happy to have you, and I would suggest we just jump in the middle of it. And the blatant fact is share price has come down 70% from its high. And the sell-off suggests something, casts doubt as to whether Alcoa is still committed. How can you counter this worry?
Thank you, first of all, Sven. Yeah, good to talk to you on a one-on-one. It's always good to have a sort of a heart-to-heart chat as well. So first of all, thank you for reminding me the share price is down by 70%. That's very pleasing. But look, there's probably a lot of reasons for that. First of all, I suppose, there's a market, and then there's a bit of stock-specific news as well. But I think it is probably the victim of a normal trading environment when the primary good news is out. I suppose that most of the hot money, the guys that are following the momentum, do leave. So so a combination of quite a few things has resulted in the share price as to where it is now. So. But to your point, how do I give comfort back to the market? The comfort comes in a lot of different ways, and that's simply just by saying the fact that we're really just getting on with the job and delivering upon a sort of a fairly elaborated sort of three-stage development process that we're doing. So whilst it's simple enough, and it's a bit like a scenario of a duck paddling on a water, and there might not be much news flow looking at the duck from the surface, but certainly from under the surface there is a lot of activity, a lot of things that Alcoa is doing, a lot of things that we're doing in building the story. And in a way, the share price does not reflect the activity or the value that's been built. So a joint development has been going now for 6 months or a little bit more now. And if anything, the value's been built since when we first announced the deal. The time has moved on, and so the value's been built. So the markets do get that wrong a lot of time. There's always a disconnect between the value and the price. And the one thing that we are focused on doing is building a project. We're not necessarily trying to manufacture a price, and it's up to the shareholders to see where that is. So the price now probably reflects that the deal isn't going ahead to a large degree. It's pretty close to a share price where we were maybe 12 months ago. When we were first in negotiations with Alcoa, and the signing of the deal was the target, and it was probably appropriately priced at that. But here we are, the deal's gone ahead. Alcoa has committed $243 million US to the deal. If you equate that on a share price with FYI share price, you do the math, it equates to a lot of value. So now I suppose it gets down to the risk of things occurring and Alcoa continuing. And I can just, to your point, I can assure you that all the activities that we've been doing in 6 months are leading up to the fact that this deal will go ahead. There are some gateways that we need to get through, there's no doubt, but any company, large or small, will generally have gateways to deal through the what-ifs as they go along. But at this point, every gateway's been achieved.
So what you're saying, effectively, you are not a lame duck. You are a duck that's actively paddling below the water. Unfortunately, the market can't see it. But bottom line is, Alcoa is still very much committed and wants to drive this forward and is driving this forward. Now, I think what adds to the confusion of shareholders is the nature of this agreement with Alcoa. It is staged, and certain milestones need to be reached in order to trigger new, let's say, a next level of funding. I think it really would help to understand where exactly we are in this process and what this process involves.
Yeah, no, exactly. So I should say at the outset that that anybody who is aware of corporate activity and the commitment of funds, a Fortune 500 company like Alcoa doesn't overly promote the fact that that they're doing something with a small company. So the news flow is a little bit hard. But a company like that also doesn't publicize the fact that they've committed $243 million US without that already being an object or a fait accompli to a large degree, because that's just downright embarrassing, isn't it? That you say, oh, well, we're going to invest in this particular, and it doesn't happen. So there's a large degree of confidence from Alcoa already. And we know that, they're probably one of the leading alumina producers in the world. They're one of the leading project developers in the world. So there's a process that they need to go through, which is just a logical project development, step by step, very conscientious, very deliberate building up of a project. And that's a skill set that they've developed over the 100 years or so that they've been around. It's not a skill set that FYI has necessarily, although our group and management participants have developed other projects before. So we're contributing to the deliberate staged project development, and that's simply the way that it goes. Right now, we're only 6 months in the formal signing, so we're in sort of stage one of the development of the demonstration plant. That's quite advanced, and to a point where the joint development group are very comfortable about the way that that's heading, and that's just simply it. It's like building a house. You don't finance the whole house at once to be built. You do a stage, then you pay for it. You do another stage, and you pay for that, and so on until it's complete. And this is no different. We're building a world-class project, but it has to be done in stages and done appropriately. And that's simply all we're doing.
In your quarterly, you were making reference to 3 stages, and you just said we are still in stage 1. Do I understand you correctly here?
Well, stage 1 is, as outlined in the presentation and the quarterlies, it's a tech development, but we're actually waiting for stage 1 sign-off. But we are well into stage 2, but not officially. We're waiting for a sign-off, which allows us to officially move into stage 2. But there's a transition occurring at the moment, and that's just the way that projects work. We're not sitting around not doing anything, twiddling our hands while we're waiting for official sign-off. Yeah, we've got work to do, and we've got a schedule that we want to stick to, and that's what we're developing. Yeah.
As far as I remember, in your quarterly, the schedule was supposing that stage 2 would be finalized in the 4th quarter, say, of this year.
Correct. Yeah.
And what would that exactly trigger?
So that'll trigger the FID, or the financial investment decision, to proceed. And that's a logical gateway again for moving forward, and another step for commitment for funding. To date, quite a considerable amount of funds have been committed, but that'll be our first real big major step.
Can you quantify that a little bit more in terms of funding?
No, I can't. Sorry.
You can. Okay. Considerable. Okay, that should be enough for us for this point. Okay. Well, I think the worry, and obviously there's a lot of reasons for investors to worry these days. One of them is the slowing down of Chinese economy, and there are let's say, discussion on the discussion boards. There's discussion about how that might affect even Alcoa's investment decisions, because what is the urgency for them to move ahead with a project like this when they see a slowdown overall?
Yeah, well, look, a lot of things are going on in the world. That's like most things, politics is quite a complex thing. There is a countercurrent, interest rates and a whole lot of things going on, included with COVID. What is the urgency to get going? Well, simply because both companies agree to a shortened timeline, and we want to get up and running. We see a perfect window to get into production, and that's around about the 24, 25, where there's a deficit in the market. That's an ideal entry point for this project. China has not much control or influence on what we're trying to do. We don't see China as being a market, so it's not a place that we're going to sell into. And in fact, if the longer that China has its problems, probably presents us with opportunities in actual fact in other Southeast Asian countries and Europe, where these markets are generally serviced by China. So, but with this deficit, we do see that we'll have a very good open runway to get into these markets, and China is not an inhibiting factor at all in what we're trying to do.
Okay. The other item that comes up is inflation, and specifically inflation of capex. So the obvious question is, what happens if it turns out that the 243 million US are not enough to fund this project? Who is on the hook then?
Yeah, absolutely. So, look, inflation, like most things, are cyclical. We're in a stage where our development and inflationary pressures upon what we're doing are minimal. And I should point out as well, same with COVID. We can't say that we're immune from that, but the actual impact of that is very mild. Again, with inflation. So right now in our development phase, that is controllable. The project that we're dealing with, to your point, is that if our overall overruns are inflationary affected, there's many things that we can do to control that. And I can rattle off a few bullet points. And first of all, our DFS, we allowed for a lot of inflationary factors in that. There was a lot of I guess risk areas that we used very conservative costs. So we think that our overall project budget, there's a lot of fat in that. Of the inflationary thing, what we're trying to do is obviously work on that and build efficiencies and into the capex as well as the opex. So we think inflation will have an impact, but not as severe as to make render the project non-economic. Absolutely not. In the event that there is an overrun, obviously we'll work at that as we get close to it. But we'll see.
So takeaway is you would say you would confirm that the project overall is still very much on track. There's
yes.
no worry to think that Alcoa is withdrawing or delaying. One of the things that I think would go a long way with the market is offtake, because and I know that you have previously been really active in that regard. I wonder, is Alcoa just as active in that, or are they more conservative? Do they rather take a more conservative approach and want to wait until they have something to sell?
No. So a good question, and a couple of points within that question. First, my address the first point. I wouldn't, as an investor, mistakenly take the view that because there's no news that nothing's happened. I gave you the example of the duck. There's certainly plenty of things that are happening, and we're very much on track on our development. So in this case, no news is good news. It's unfortunate, but we're just in that phase where no news is probably good news. counter to no news is bad news. That's certainly not the case. In terms of the joint venture and joint development team focusing on all the elements of the development, engineering, tech development, and marketing, construction, the whole lot, we're very much focused on every one of those. We have some separate roles and we have some joint roles together. But to your point on marketing, Alcoa is a very big group. They're very experienced at what they do, and they have a very well-developed marketing arm to their current business, and that is a great adjunct to the HPA business that both companies want to build. So, they're very much focused on marketing, and really, at the end of the day, we're here for the end game, which is to sell the product. So, in this case, they treating the marketing side as equally as important as the development. And that's the way it should be. So we're very, very focused on the marketing. The marketing under FYI has done exceedingly well. The material that we've produced in the past has been very, very well accepted into the markets, both on the sapphire and the separator markets, and a couple of broader boutique sized markets. And under the joint development team, we're very much focusing on those as well.
Is it too early to say which market might take the lead? Is it the traditional LED market, or is it rather the coating of lithium-ion batteries at this stage? What do you anticipate, without giving away names, of course?
No, well, that's right. As much as I'd love to give away names, we are signed on a few agreements, but we have strong leads on both industries, on both sectors. Which is likely to happen first? Well, it's a bit hard to tell. The world is going through a bit of an extraordinary time, and there is a reset definitely happening globally. And so for us, we see that there's an equal opportunity probably to develop both together. The traditional LED sapphire glass market is a very big market. It's the bigger market of the two. And the separator market is growing at an incredible rate, around about 20% per year, and that provides the sizzle. And I think really the combination of those two markets will have a great outcome for us personally. As I mentioned, there's a definite deficit coming in around about the 24, 25 mark that we'd hope to do. And it really is a matter of who moves first. But we know that they're circling and interested. So,
well, it's something to think about. There is an existing market for HPA. Currently, it's being sourced, I think, even from Russia. It used to be sourced, actually, if I'm not mistaken, from Japan as well. But any product currently available is derived from bauxite, so it's energy intense. So I would assume that prices should be high, right? Even increasing. So I think, isn't that also still very much a driver for this project, because it's greener in that it's less energy dependent, and after all, we're talking about maybe 9,000 tons, which is a fraction of the market, and it is still very much a reliable and high purity nameplate high purity quality that you would provide. I think from an offtake perspective, that would be very appealing to me, actually.
Yeah, absolutely. So the FYI developed innovative process has numerous advantages over current supply. There is no doubt. Yeah. The pricing complex is certainly one. The purity is another. The deleterious matrix is another, and massively contributing factor to the attractiveness of this process is the ESG overlay that is becoming more and more apparent and evident with the production of primary. Well, not only just aluminas, but the HPA, we think there's a huge advantage over current supply of that. And it's not just happening with our industry, of course, it's just about every other industry. So, but the fact that we're actually leading this and pushing that is a huge advantage. So, we see that there's a number of factors that we have an advantage. We have to develop our project and our product a little bit more, but we're doing that very conscientiously and very deliberately. As I said, we're building a project here and building value. We're not necessarily trying to just cobble something together and to get into a market to address a market timing. That's a huge overlay of risk. Both Alcoa and FYI, we want to get into production, but we want to do it correctly and make sure that it's a quality product. And that's what we're aiming for. All those contributing factors add up to the premium that we'll probably be able to ask for in the market. Yeah.
I think, Roland, that wraps it up very nicely. FYI is far from being a lame duck. It's a very actively peddling duck. Unfortunately, the market doesn't see that so much and doesn't appreciate it at this point, but eventually it will. Let's take this up another time, and I'm looking forward to continuing the discussion with you. Thank you.
Yeah, no, I appreciate the opportunity to spell it out, and hopefully the investors do realise that's the case. Yes, we don't have necessarily a short-term development timeline. We are looking at the the long game here, and that's very much what we're focused on and building value. So we're not the lame duck. We're definitely far from that.
Thank you.
So thank you for your time. Yeah.
Thank you, Roland.
Cheers. Thank you.